What's up, you guys? It's Robert from thecashonmind.com, and today we're going to be talking about building credit. We're going to be talking about your credit, my credit, and credit in general. We understand that building a credit score can be tricky. If you don't have a credit history, it's hard to get a loan, an apartment, or even a credit card. I started establishing credit a little bit before I turned 18, and by the time I was of age, I got my first credit card. I had a $5,000 limit on it, and this card was the Navy Federal cashback credit card, and I use it for all of my purchases because I pay off my statement balance each month, avoiding any interest and fees associated with it. I've got the card right here, but I made sure that you couldn't steal my identity, so we're all good. But if you're new to credit, the frustrating catch-22 goes like this. How are you supposed to show a history of responsible credit repayment if no one will give you credit in the first place? No need to fret. There are several tools that can help you establish a solid credit history in little time. No need to fret. There are several tools that can help you establish a good credit history in a short amount of time. If your goal is to build credit without a credit card, you should consider getting a credit builder loan, a cosign loan, or a secured loan. There are a bunch of ways to use things like phone and utility payments to build credit. If you want to get a credit card, try starting with a secured credit card or a co-signed card. In this video, we're going to outline 4 different ways that you can build credit without having a credit history and talk a little bit about scores and how having a good credit score will set you up to obtain the best interest rates possible on many of your different loans. Right after you smash the like button, it really helps out with the YouTube algorithm and it makes it easier for my channel to grow. Thank you so much in advance for that. Now, without further ado, here are 4 different ways to build credit. Number 1 is to use a cosigner. It's very possible to get a loan or unsecured credit card by using a cosigner. Be sure that the cosigner is aware that they're on the hook for the full amount owed if you don't pay. A cosigner essentially uses their credit score to vouch for you since you don't have credit or don't have good credit. They are responsible for any debt if you don't pay, so make sure it's someone in your life that you can trust. Number 2 is to get a credit builder loan. A credit builder loan has its function in the name. Its sole purpose is to help people build credit. Typically, the money that you borrow is held by the lender in an account that isn't released until you pay off the loan. Think of it as like a forced savings program that gets reported to the credit bureaus. Most of the time, these loans are offered by credit unions and community banks, which don't operate for a profit and are able to give better interest rates all around. A little side note, if you have the option of going with a credit union or a for-profit bank, it might be in your best interest to go with the credit union because they are more likely to have higher paying rates on your savings and checking accounts. But nonetheless, if you already have money in a bank, see if you can get a secured loan for building credit. With this form of credit building, money in your account is held as collateral. Number 3 is to get a secured credit card. If you're in the process of building credit and you still want a credit card, most likely you have to start with a secured credit card. This means that the card is backed by cash deposit that you have to make up front, and the money deposited is typically the same as your credit limit. The goal is to make payments on or before the due date and hopefully pay your balance off so you don't accrue interest each month. Keep in mind that the goal is not to have your secured credit card forever. The purpose is to get enough credit that way you can qualify for an unsecured loan. A pro tip that I'd like to tell you is to choose a credit card with low annual fees and try to make sure it reports to all of the credit bureaus. The 3 credit bureaus are Equifax, Experian, and TransUnion. And lastly, number 4 is to get credit for bills that you already pay. Think about making the bills that you already pay, such as your phone bill, your car insurance, and your rent, count towards your credit. Some companies, such as Rental Karma or RentTrack, will take a bill that you're already paying and put it on your credit report. Keep in mind that not all credit scores take these payments into account, but some of them do. This might be enough to get a credit card that can allow you to establish a solid credit history. Experian Boost actually offers a way to have some utility bills show up to the credit bureau. Keep in mind that this is only with Experian, so it won't work with the other 2 credit bureaus. If you want to build an amazing credit score, it takes a history of on-time payments and good credit practices. To have a FICO score, you need to have at least 1 account that has been open for over 6 months and have 1 creditor reporting activity. Here are a few tips to help you create a solid credit history. Number 1 is to keep your credit card accounts open. A large portion of your credit is based on account age. It's important that you hold on to accounts for as long as possible, and I've had my 1.5% cashback card for a little over a year now, and I think that I'm stuck with it. So when you're getting credit cards, try to get ones that you know that you'll keep around for years to come. An example of this is if you have an account for 2 years and an account of 4 years, your average account age is 3 years. If you close the account that you've had for 4 years, your credit age goes down and then your credit score will also go down. The next tip that I have for you is to keep your credit utilization low. Utilization is essentially the amount and a percentage of your credit limit that you've already used. It seems as if banks want to lend money to people that don't really need it because they're more likely to pay it back. It's a really interesting phenomenon, and I mean it works. Banks want you to pay them back so they can stay in business. And if you barely use your credit card, then it shows at the bank that when you do use it, you're more likely to pay it back. The example that I have is if you have a $10,000 credit limit and you currently have a balance of $1,000, your credit utilization is 10%. It's recommended that you keep all of your cards, all of your total credit below 30% and make 100% of the payments on time. One of the largest parts of your credit score is how well you pay. Make sure that you always pay at least your minimum balance or pay in full each month and never make a late payment. Bills that go unpaid can be sold to a collection agency, which will seriously damage your credit score and hurt your chances of getting credit later on when you need it. Your credit is important. It's a score that will follow you until the end of time and one that holds a lot for your financial future. It's used to show your creditworthiness to lenders and is something that you should take very, very seriously. Work from a young age to improve your credit so that you can live the life that you deserve and save thousands of dollars in interest and fees over the course of a lifetime. Credit scores are based on a range from 300 to 850. A good credit score typically rates as good at around 690. A credit score above 720 is considered excellent by FICO and VantageScore, which are two of the most common systems. A good credit score really depends on the lender. One credit card issuer might think that your score is high enough for their card, and others might not think so. Since it's their business, they get to decide whether to give you credit and at what interest rate. FICO and VantageScore both use the range of 300 to 850. Most credit scores fall just above 650. The average FICO score was a little above 700 in 2019. Having good credit matters because it will determine whether you can borrow money and at what interest rate you'll have to pay. Some of the great things that good credit can do for you are help you obtain a desirable car loan or lease, allow you to get a mortgage, and allow you to get a credit card with a good interest rate. Not only does having a good credit score affect you in the areas that we just talked about, some states actually reward people by allowing them to pay less for car insurance. Some employees look into your credit standing also when determining your eligibility for a job. The point is, you need to obtain and maintain a solid credit score whether you have plans to apply for credit or not. The mark for having exceptional credit lies at the score of 800. Having a credit score of over 800 is a great achievement that will benefit you every time you have to use it. Having a score of 800 will help you when it comes to these three different banking products. Car loans. Believe it or not, you'll qualify for rates significantly lower than people with a lower score. When you buy a new or used car, odds are that you'll only have to pay 2 to 4% interest. The next are credit cards. Not only will you qualify for some of the best rates around, you'll also get valuable perks such as a higher credit limit and upfront signing bonuses. You'll also get a super low interest rate. This is what's called a prime rate, and it's only available for those with super good scores. And lastly, for credit scores below 640, the average interest rate for a mortgage is 5%. Having a credit score of over 800 might qualify you for loans as low as 3.4% in some places. Rates, of course, vary by location, and you can definitely check what's available in your area. Odds are that if you have bad credit, you already know, and it can bite you when it comes to signing up for new credit cards, taking out a loan, and getting a mortgage. Some of the punishments for having less than average credit are you'll generally pay higher interest rates on loans and credit cards, it'll raise your insurance premiums, and hurt your ability to rent or get an apartment. It'll also decreases your chances of establishing credit in the first place. There are a bunch of different things that can go into creating your score, and some of the things that will hurt your score dramatically are delinquent payments, which are not making payments on time or having made a payment at all, having an account in collections, having a bankruptcy, or having a charge-off. Learn healthy credit habits that will benefit your score long term, and you'll be set. The 7 different factors that affect your credit score information varies depending on the scoring model. Credit scores are usually calculated by elements on your credit report such as the total debt, public records such as bankruptcy, the number of inquiries on your credit report, the type, number, and age of credit accounts, and your credit utilization rate. A common question that people have is whether or not checking your own credit report can hurt you. The answer to that question is a firm no. Checking your credit will not hurt your credit score because it's what's known as a soft inquiry. Checking your own credit score is different than a lender checking your credit score. You can view as much as your score as you like using Credit Karma or any other secure source, and we have a link for Credit Karma in the description. It's a law in the US that you're entitled to get 1 free copy of a credit report every 12 months from each one of the nationwide credit reporting companies. This means that you can get 3 per year. These credit bureaus are Equifax, TransUnion, and Experience, as I mentioned before. One of my pro tips is to get a credit report from one of the 3 credit bureaus every 4 months so you can see your report 3 times a year. If you have solid credit habits that you practice consistently, you'll end up building good credit in no time. And that's all I've got for you today. Thank you so much for watching. Make sure to smash the like button for the YouTube algorithm. It really helps out the channel. Subscribe and ring that notification bell so YouTube always tells you when I post a new video, and leave a comment down below. You can follow my Instagram and Twitter. Both links are in the description, and I'll see you in the next one. Thank you so much.